Hello, everyone, and welcome to The Buck Stops Here. I am Catherine Murray. Well, we've certainly seen very strong market performance in 2024. A lot of questions, though, do remain in terms of what does 2025 look like and how should we be positioned and how should we position our portfolios and our expectations. For that, I'm pleased to bring Myles Zyblock to the program today. He's the Chief Investment Strategist at Dynamic Funds and a real veteran in the industry. Myles, great to be with you, and thanks so much for joining us. I really appreciate it.
Thanks for having me, Catherine. It's nice to be back.
Thank you. I did read your 2025 outlooks. There's certainly a lot to get through. Why don't we actually start with your expectations for the U.S. economy, because that, of course, bleeds into or helps propel the rest of the world potentially. So what's the view right now on the U.S. economy and Trump policies?
You're absolutely right, Catherine. The U.S. economy is the largest economy in the world, so it's really important to get your head around what may or may not go on in the U.S. And here's the issue when you're thinking about the U.S. They seem to be doing fine. I mean, consumer spending is holding up. Wealth, as you mentioned, wealth gains are very strong. The labor market's kind of hanging in there. I wouldn't call it strong, but it's not terribly weak. So you have a good fundamental backdrop supporting the U.S. economy, but we do have obviously a new sheriff coming in town, Trump, in January, and he's made through his campaign trail, he's made known that he wants to make some changes, and some of these changes could be pretty serious. You mentioned or you think about what he's talked about. He's talked about obviously tariffs, changes to the border policy, immigration. He's also mentioned tax cuts, particularly corporate tax cuts, and deregulation. And I'd say half of these four that I just listed are you could you could sort of look at them as positive for growth, and the other half, the other two, tariffs and maybe immigration at the margin, at least the first round effect, could be a little bit negative for growth. So what I'm saying is the base case here going in is that I think growth is going to be okay in the U.S. in 2025, but we have to be alert to any potential or major policy shifts.
Hmm. So it's almost as though, and I think you've written about this in looking at it as cross currents, right? Some are positive and some are negative, and it really just seems to depend on whether you're a bull or a bear as to how this actually plays out and affects economic growth as well as obviously the markets. But talk to us about, when I've done reading on this, the impact of tariffs is actually quite small to the US economy, particularly if they have tax cuts. And that perhaps is why President Trump-elect doesn't seem to have an issue with it. We seem to, and perhaps rightly so. But it doesn't seem as though it's going to really impact the US economy. Do you agree with that?
Look, there's a range of outcomes for tariff policy, and the Trump has thrown around 60% up to 60% percentage point increase in tariffs on China and 10% to the rest of the world, and I think that's the very high end. First of all, I do think that he's going to use the threats of trade tension to sort of get what he wants to happen with other international actors, like for example, what he threatened Canada recently with a hefty tariff, to make us help or to help tighten border policy in Canada, as
Hmm.
one thing that he wants to get done. So I think it's going to be a negotiating tactic. I don't think that the tariffs are going to, first of all, be as large as feared by some analysts. Number two, and I think you rightly point this out, is that although the U.S. is a very large economy, it's not all that dependent on trade. Total trade,
Hmm.
exports plus imports as a share of GDP is 25 or so percent for the U.S. So 25% of GDP is total trade, and you run those same calculations for Canada, and we're up near 65%. So trade is
Right.
much more important for a small open economy like Canada. So we have to be a little bit more alert in Canada about the potential implications of some trade frictions. But like you say, the U.S., they're pretty shielded, and especially, like,
Yeah.
again, as you mentioned, there's other things going on in the U.S. that might offer some offset to the economy, like corporate tax cuts.
Absolutely. It seems as though trade for them, has less of an impact. And I think that's so important because then we have to roll that through in terms of what these companies and consumers are actually going to feel like in terms of spending and therefore the markets. We're going to take a quick break. We'll be right back.